Hi, and welcome to another Big Trends how-to video where we're going to cover MACD, that's moving average convergence divergence, in just under 5 minutes here. So of course we're using the Trixie charts on the bigtrends.com website, which you can use as well for free. So quickly we're going to go over here, and right now we've got, as you can see, 3 different charts open from that tab functionality. We've got the Qs, the SPY, which is the S&P 500, and LFT, a particular stock that I've traded in the past with some great success, Long Top Financial Technologies. But we're going to focus on the market right now, and we're going to take a look at MACD. So I'm going to go over here to the settings, and I'm going to choose add an indicator. Now we're going to choose the moving average convergence divergence, and of course we're going to look at the parameters here because the parameters are important: 12, 26, and 9. So what is MACD? I'm going to go ahead and add this, and these are the parameters that are traditional. You're going to be looking at basically a couple different lines here, and we're going to explain, of course, what they mean. Now, MACD was created by a gentleman named Jared Apple, and it is based on 2 moving averages. No, not the 2 you're seeing here at the bottom of your screen, but actually it's focusing on 2 moving averages of the price action that you see up here in the top part of your screen. We're going to be focusing on what those parameters were: 12, 26, and 9. So the 12 and 26 represent 12-bar exponential moving average of the price action. And then you have the 26-bar moving average of the price action. Let's go ahead and place those on there so you can see where this is actually coming from. So I'm going to choose moving average, which is probably up here at the top. We want exponential, don't we? Exponential moving average. We want to do a 12-bar exponential moving average, and then we want to add another exponential moving average at 26. Okay, so MACD is actually measuring the divergence in these 2 moving averages on the price action, the red and green. The red being the more volatile, thus shorter moving average, 12-bar exponential moving average. Let's change that to a different color here. We'll just keep it red. Okay, so down here at the bottom, what's MACD doing? MACD is the green line. The green line is measuring every day. It takes the difference, 26-bar exponential moving average, the value of that minus the value of the 12-bar exponential moving average. So if one's higher or lower, you get a positive or negative or trending difference, right? So in a fast growing or accelerating period of a stock chart, you'll see the short-term moving average, 12-bar moving average, start to outpace the longer term. As you can see here, like we saw right there in, I believe that was the middle, probably about March 15th area, where you started to see the bottoming in the market on the short term. And you can see what happened there. The short-term moving average started to outperform the longer term, which meant that short-term price action was gaining momentum. So what did you see? As we saw the cross on MACD, we crossed above the 0 line. See that green line? That's measuring the difference in the 2. So then, how do you get a signal with MACD? Well, traditionally you're going to be looking for, then we place a moving average exponential on that MACD line, which is the red line here in the bottom of the screen. That is a 9-bar exponential moving average of the MACD line. So traders will typically and traditionally look to trade the crosses of that. At Big Trends we have a unique method of trading this, applying what we apply towards everything, and we look for confirmations on those crosses. So something that's very important, always looking for confirmations. What's the bottom line takeaway from MACD from a Big Trends perspective? Always have MACD in your favor from the 0 line perspective. Never trade a bull position based on MACD when MACD is where? Below 0. Never trade a bear position when MACD is above 0. So if you have a bear signal, where do you want MACD to be? Below 0. Like you can see back here. Great sell signal. Here, want to wait till it gets above 0 because it could be what? A whipsaw. and we all want to focus on avoiding those whipsaws. So I hope you enjoyed learning very quickly here what MACD is, the moving average convergence divergence based on the two moving averages, 12 and 26 bar. Then focuses on signals based on an exponential moving average of that MACD line. So very, very classic technical indicator with a little bit newer spin on it. Hope you enjoyed it, and please visit us here at bigtrends.com for your access to these free charts.